Bitcoin and the cryptocurrency space as a whole is all just fantasy land, right? How can we really value a token? How can we value Bitcoin when it's not really coupled to anything? When we buy gold, we know we can produce something out of that gold. We can produce some jewelry, and there's demand for jewelry. When we buy oil, we know that we can turn oil into petroleum, and petroleum is used for transport, and we know at what point in time is transport profitable and when is it not profitable. This exercise can be done with pretty much any asset, right? Whatever raw material we have, we can derive what kind of demand could we get from the products that we make out of that raw material. Now for Bitcoin, there is no such thing. We can't produce anything out of Bitcoin. So how can we value Bitcoin? When it's all just fantasy, when it's all just imaginary numbers, at what point in time is it actually cheap? At what point in time is it actually expensive? How can we get some skill, some statistics into something that appears to be just a random guessing game? I believe the key to pricing Bitcoin is to figure out the psychological anchor points. So everybody that invests into crypto sees their current purchase price relative to the current market price. And if you're currently in profit, we might consider taking some of that profit and maybe allocate those gains into just consumption or potentially into investing in other asset classes. If we are in losses and if we long-term believe in the asset class anyways, we might not sell, right? We might just wait for the asset to get back into our entry position price or potentially above. And so for Bitcoin, the thesis is that Bitcoin isn't as inflationary as fiat currency, and that's why it should outperform fiat over the long term. It should become more and more expensive in US dollars. Now what we see over here is the Bitcoin price starting in December of 2014 all the way to today. So that's this logarithmic scale here on the left. We see how sometimes we are in massive rallies, right, from $200 all the way to $20,000, to then see a price collapse down to $3,000, to then rally up again above 60,000, to then come down to 16, etc. Now we are close to 100. What we see here in purple, the line that is way more smooth, that doesn't go down that much, that's the realized price. That's the average cost basis of the market. That is the anchor point of the market. So again, if you've got your crypto portfolio and you look at what kind of price did you buy your different assets for, and you look at the current price, then you've got the ratio, right, of your own realized price relative to the current price. Now we can just look at Bitcoin's price history. We can look at what kind of prices did Bitcoin move in the past, and from that data we can infer what is the average cost basis of all the market participants. Are all market participants currently in profit because there was so much demand recently, or are all market participants currently in losses because enough people sold their Bitcoin? And so why is this so interesting? It's interesting because whenever we are below that realized price, below the average cost basis, the selling pressure tends to subside. Bitcoin tends to not get sold that much anymore. People just wait out when they are in the negatives, when they believe in Bitcoin long term. And who is then pushing up the price? It's the people that still dollar cost average into Bitcoin, right? That continue to buy a little bit every month. And then we tend to see a slow recovery. And so whenever we are below the realized price, it's a very good time historically to buy. Unfortunately, we don't get there very often, right? We got there in 2015, we got there in 2018, then in 2020, and in 2022. So only every 3 years or so we get there. And currently the realized price is at 43,000. So there's now two ways this could resolve. The first one is that we simply go sideways in Bitcoin for a while and the realized price continues to creep up. So the long-term holders continue taking profit, or alternatively, we actually see some real profit taking. And then the price would go down and would approach the realized price faster than the realized price can go up. So somewhere we are probably going to meet in the middle. Now, what is this squiggly orange line here at the bottom? This is how much the market is currently in profit or in loss relative to the volatility. Now, volatility simply means how much does the price currently go up and down, right? Is it going up and down a lot, or is the market rather smooth, is rather calm? calm, going up and down not that much. We want to look at the current profit that we are currently in, or the current loss, relative to how much the market is moving. If the market is moving a lot, then we should be okay to see a bit more profit temporarily. If the market is in general calm and we're already that much in profit, that might be more alarming. And so when we look at how much is the market in profit relative to realized price, and that relative to the volatility, we can see again where nice potential bottoms are, and we can see where nice potential tops are. If you followed that strategy in 2021, you would have sold very close to the all-time high at 60k. And you also would have bought very nicely close to the bottom between 20 and 16k. We haven't seen these extreme levels that we saw at the beginning of 2021 just yet. So this could indicate that the market isn't yet extremely heated. It's hot, but it's not extremely heated. People are in profit, and there's definitely some potential downside, but it's not like everybody is getting crazy over buying crypto right now. Now, there's a way to adjust this and to get into a bit more detail. Instead of looking at the entire market, we can segregate this by long-term holders and short-term holders. So we look at the average cost basis only of the long-term holders. And that's this chart over here. Again, we've got our market value to realized value Z-score, but let's focus just on the realized price. So this is Bitcoin's price, and the realized price is in blue. And again, in the bear markets, we tended to get very, very close to the realized price. Not during the COVID crash, we were slightly above that, but intraday, so within the day, we actually did touch the realized price. And unfortunately, that long-term holder realized price is even lower. It's only at 24.8k. Now this looks unimaginable, right? That we could ever go down that much. But just look at when we were at 67k, right? At that point, the long-term realized price was at a bit over 16k. And then in the end, we did hit the long-term holder price at 20k, and we even went down to the 16k level afterwards. So I'm not saying that this will happen, and sometimes we do see long-term holders taking profit and this going up very, very quickly. Currently, we don't see that yet. The long-term holder cost basis has been at 25k roughly quite a while, and this does show us that there is some risk in Bitcoin's price. Things can go bearish sometimes. Now, that does not mean that we have to sell. It simply means that we have to also hedge ourselves. So we should also own some asset classes that are not that much correlated to Bitcoin, that we can potentially then sell if Bitcoin does crash, right? If Bitcoin suddenly sees a 50, 60, maybe 70% drop, we should have some money on the sides that we can allocate towards that crash. And if we have some gold, or we simply have a very large income where we can then save a lot and then put this towards Bitcoin, that's also okay. But we need to have something that we can take advantage of a crash in case it comes. But again, it's just one of many scenarios. There's also the opposite scenario, right? Where we are still vastly above the long-term holder realized price. Right over here was 3x above, and still subsequently we made a 20x rally. Again, we are not likely going to make a 20x rally in Bitcoin's price now because the market cap is already very large. But it simply shows that just because the price is above the long-term holder realized price, it's not necessarily a reason to sell. We can continue heating up in the market. It only shows us times where it's specifically great to buy. Right now, it's not specifically great to buy right now. It means we should still have something that's diversified away from Bitcoin, simply as a hedge, because we do not know what's going to come. Again, the market is not historically heated. It's hot, but it has been way hotter in the past. Now, besides the realized price, so the average cost basis, we can also have a look at what happens with the Bitcoin that currently move. So let's say you recently moved your Bitcoin. Let's say you recently sold your Bitcoin. Did you sell this at a profit or did you sell this at a loss? And when we look at this for the entire market again, we do see some nice correlations. So this is the spend output profit ratio. So the Bitcoin that moves on a day, does it make money for the people that moved it, right, that sold it, or did it generate a loss. And of course, sometimes people make massive money, right? When Bitcoin is close to 20K, sometimes people lose money. And the line here in black, that is the difference between losing and winning. And we can see that even though Bitcoin long-term goes up, there are times when people simply lose a lot of money, simply because they bought at the peak of a hype and they don't have long enough of a time horizon and they give up when things turn bearish. And so that's exactly the time to buy, right? When the short-term holders are capitulating, when the market as a whole tends to move Bitcoin at losses. And it's time to sell when the market as a whole is very heated, when a lot of profit has been taken. Now, we did go above the 1.25 standard deviation 3 times in this chart. So at 20K, then at 40K, and now recently at 67K. And it's not the perfect top always, right? With the 40K, we subsequently still went up to 69K. And here with the 69K top, we still went subsequently up to above 100K. But it does give us an idea of when to potentially take some chips off the table if we are overexposed to Bitcoin compared to other asset classes, right? Compared to precious metals, compared to property, compared to stocks. We don't want to have 90% of our money in crypto if our wealth is already several years of our income, right? We don't want to see that go down by 70 or 80% sometimes. And so with that spend output profit ratio, we can again set this relative to the volatility. Then we get a Z-score, and that's this chart. A very nice indicator. Again, it shows us similar buying opportunities and selling opportunities. And on that chart, we are relatively balanced. So we aren't even heated in the market. We should rather wait it out potentially. Again, we can split this between long-term holders and short-term holders. So here are the long-term holders. We are slightly heated, but nowhere near to where historically it would have been a great time to sell. So the long-term holders should keep on holding if the past is any indication for good profit taking. And of course, the buying opportunities are pretty much similarly described. We are not living at a time of historical greatness in terms of prices, right? We should be somewhat careful despite potential bullishness in the medium term, because we aren't that heated. And so this is for the long-term holders, but you're watching YouTube probably because you want to make more than just one trade every 3 or 4 years. So let's have a look at the short-term holders. So this is more volatile. This tells us on the short term when it might make sense to buy. And when we look at that, we also still can get nice rallies out of this, right? From 30K all the way up to 60K. So that's a 2x. That's when this indicator turned green, right? This is when we should be buying at these lows. And then conversely, we should be selling at times like this in the middle of March. This is also where I took quite a bit of profit, where I sold 1/3 of my Bitcoin stack at 73K. A lot of indicators flashed red at the time, and I took advantage of those prices. Now, subsequently, we still went higher, and I did buy low in here again. And I am currently invested in Bitcoin, full disclosure, but I am watching various metrics closely. And the short-term holder SOPR Z-score is a pretty useful metric. Currently, the short-term holders still make money when they're selling. Now, there are 2 aspects to this, right? There is the point of sale where we sell our Bitcoin and we realize our profit and losses, and there's the average cost basis. But then there's also the unrealized profit and gain. And that is very interesting because especially when there's a lot of unrealized profit, we might want to take that profit. Now, here's a long-term chart of Bitcoin, which also shows the unrealized profit and loss. And the unrealized loss doesn't tend to be that large. The unrealized profit tends to grow over time, which kind of makes sense, right? Bitcoin's price is going up over time, and Bitcoin went from 20K to 100K, it 5x'd. And so the unrealized profit went from 76 billion to now 1 trillion. And so isn't that interesting? The unrealized profit 15x'd, but the price only 5x'd. What that means is that the people that buy Bitcoin on average tend to adopt Bitcoin and just continue holding it. There's more unrealized gain than realized unrealized gain. So if you have, say, one Bitcoin and then you double the US dollar valuation of that Bitcoin, on average, you're going to take less profit than you made on paper. So on paper, you made 100K, but on average, you might only take 10 or 20K of that profit and let the other 80K ride. At least over the cycles for the entire market, that is the case. The price increases less quickly than the unrealized profit. Now here's a more complex chart. This shows us the relative unrealized profit and loss, because again, this tends to grow over time. And so we just want to look at this relatively speaking. How much unrealized profit and loss is there for short-term holders, for long-term holders? And so the unrealized loss can be seen here with this red line. Of course, we want to buy whenever there is a lot of unrealized loss, and the opposite, we want to sell whenever there's a lot of unrealized profit. So that's this line here in green. What's also interesting is the unrealized loss of the long-term holders versus the unrealized profit of the long-term holders. So that's all in blue. Blue are the long-term holders, and we should be buying when the long-term holders are in unrealized losses. And it does show us how unimportant, relatively speaking, the short-term holders actually are, right? The long-term holders dominate the Bitcoin supply. They dominate the unrealized profit and losses. Yes, it's very enticing to look at the day-to-day prices and to get too much caught up in the daily, but really it's the long-term holders that drive the cycles. And so have a look at this. This is now the ratio of unrealized losses to unrealized profit. And again, it is a very useful chart. We should be buying when people are in unrealized losses, and we should be selling at similar levels when people are in unrealized profit. And the peaks do align to a degree. And it does show us again that if we buy Bitcoin now, we are just betting on the current momentum. We are betting on a hot market to become even hotter. We are not buying against the grain. We are not contrarian. We are not buying when everybody thinks that Bitcoin will go to zero. Right now, nobody thinks that Bitcoin goes to zero. Right now, most people are still bullish, at least on Bitcoin, not necessarily on all the altcoins, but definitely on Bitcoin. Now, I think even though those models show us quite nicely where potential Bitcoin bottoms are, and they do show us when the market might be somewhat heated, most people have a problem riding those waves. For the short to medium term trading, I think it's better to not necessarily touch Bitcoin that much, but to be mainly involved in the altcoins, because the relative performance of altcoins relative to Bitcoin does fluctuate across the cycles also quite a bit. In the last few months, Bitcoin outperformed the altcoins, and I do believe it's very likely that it will continue to outperform in the next few months. And so the way I make money with this is I short the altcoins relative to Bitcoin. So I'm not betting on the altcoins to just do bad in US dollars. I'm betting on the altcoins to do worse compared to Ethereum or compared to Bitcoin. So for example, I made a lot of money betting on this chart going down. This is the Balancer token. This is Balancer relative to Ethereum, not in US dollars. And there's really not that much volatility, right? This is not going up and down a lot. This is simply just doing worse than Ethereum over the long term. And the reason for that underperformance is increasing supply. It's the insiders that sell BAL. It's the users of the platform that sell BAL. There's more and more Balancer tokens floating around over time. And that's why the token is doing worse. Now we want to bet on the relative valuation, right? We don't want to bet on the US dollar valuation, because when Bitcoin and Ethereum goes up by 30-40%, then of course BAL can also go up to that degree. So we need to bet on relative valuations. We need to look at this low volatility chart. And making money with positions like this, I think, is the real way to get an edge, besides, of course, riding the waves in Bitcoin. But I am describing how to make money with things like this, right? When this is going down, how our portfolio is going up. I'm describing this all in the premium membership of this channel. So that's down below, thebitcoinsradio.com. I'm sharing what kind of altcoins I'm shorting, and I'm also sharing how to set up positions like this. There's various tutorial videos. There's also various videos on what I'm currently doing. There's more than 100 tutorial videos in total in premium. So feel free to check it out. So again, the link is down below. It leads you to this website. And on this website, there's also an introductory video explaining everything. It's 7 minutes in length. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. Looking forward to seeing you in YouTube again, or potentially even in premium. Cheers.